Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty hit a record high after a late recovery. Sensex scales 74,000 for the first time, gaining over 400 points. Nifty moves closer to the 22,500 mark. Shares of JM Financial tumble after the RBI crackdown, even as the company claims there are no material deficiencies or governance lapses. IIFL Finance hits the 20% lower circuit for the second day despite $200 million liquidity commitment from Prem Vatsa's Fairfax, which already owns a sizable stake in IIFL group companies. GST enforcement agency cracks down on a dozen FMCG companies, including ITC, PepsiCo, Balaji, Wafers. Claims companies have been paying 12% of GST instead of 18% on extruded snacks and fried pellet snacks. Claims tax evasion worth over 1,000 crore rupees. The union government steps up its foreign investor outreach, asks central public sector enterprises to hold roadshows for investor feedback on its calibrated divestment strategy. Sources say that government recently showcased GICRE during roadshows in the United Kingdom, USA, Singapore and Hong Kong. The Supreme Court highlights a trust deficit between Kerala and central government. Kerala terms the centre's borrowing cap arbitrary, submits that states have their fiscal responsibility framework. Centre defends the cap, argues against reckless borrowing, says limits placed as per FRBM recommendations. The court nudges Kerala and centre to resolve their deadlock via a meeting. Supreme Court pulls up officials in Uttarakhand over illegal construction and felling of trees at the Jim Corbett National Park. Says politicians and bureaucrats have thrown public trust in the dustbin. Orders the CBI to submit a report on its investigation within 3 months. Confident of winning the upcoming elections, the Modi government is charting an action plan for the third term. Sources say reducing compliance cost and scrapping penal provisions of law will be a major focus area. Promises high capex roadmap in the full budget in July. US President Joe Biden calls on Hamas to accept a ceasefire deal as negotiations enter the fourth day. Hamas claims the ball is in Israel's court. Meanwhile, the World Food Programme says a convoy carrying aid was denied entry into North Gaza by the Israeli military amidst fears of a famine. A rematch between Joe Biden and Donald Trump is now almost certain. Both Biden and Trump dominate their party primaries on Super Tuesday. All right, let's start with the market action. Stocks shrugged off early weakness on the last three to hit record highs. Sensex reversed losses in late trade to end with gains of over 400 points. Sensex also managed to end above 74,000 for the first time. The Nifty gained points to move closer to the 22,500 mark. Prashant Nair is here with the market wrap.
Well, the picture in the morning when we came in was pretty poor. Nasdaq was down almost 1.6% or so. Yields were lower. The labor market in the US was looking a little weaker as per the data on the ISM side. And the opening was expected to be weak. We did get an opening which was weak, but then there was a recovery which set in mid-session. The Nifty finally ending over 200 points off the day's lowest point. The one index which actually held steady from the open was the Nifty Bank Index, all thanks to large private banks. Actually, HDFC Bank, which is the big underperformer there, actually did not perform. It was the other large private banks which actually did bulk of the heavy lifting there. There was a little bit of drop off towards the end, but solid 0.75% gain there. The IT index also came back in the last 2 hours, starting at about 130 or so. IT stocks also contributed to the broader move that we saw on the Nifty. Stocks here on the Nifty, the gains coming through in names like Bajaj, Bharti, Mahindra, private banks, Axis, Kotak and IndusInd were the top gainers. Cuts on the Nifty large caps coming through in Adani Enterprises, Ultratech and NTPC, which of course has been a big winner. Market breadth was 5:1, losers outnumbering advances, but that moderated a bit and we finally left off at about 4:1, but still, declines more than advances. MGL and IGL, big cuts there on the back of course, comments from the oil minister. JM Financial, Manappuram, AB Capital, financial sector, NBFC type names were all under pressure. L&T Finance, another one. IIFL Finance continues to be under pressure. There were some private banks, smaller banks, South Indian Bank, J&K Bank, which also saw selling. Indiabulls Real Estate, Inox India, Ashoka Buildcon, Force Motors and something like a Soba were the other big volume-led losses today. On the gaining side, Tata Chemicals was a big mover, the top volume-led gainer, 13% gains. Pidilite and Varun Beverages were the other marquee, widely owned names which did very well. Insurance companies saw some action. ICICI Pru and SBI Life, in particular, Muthoot continues to do better, 2% today. There was Max Health. Hospitals have all suffered over the last 4-5 sessions. Max Health ended about 4% higher. The new listing from yesterday, Exicom ending sharply up. And there was also a Natco Pharma, which did very well. The story has been the broader market, which is actually seeing selling pressure, losing momentum, and that continued today as well, even as the Nifty recovered from the day's low.
Thank you, Prashant, for that market wrap. Moving on. Shares of JM Financial hit lower circuit in early trade. This after the Reserve Bank barred the company's subsidiary JM Financial Products from financing against shares and debentures. The Reserve Bank's limited review found material deficiencies in their loan sanctioning process, especially with IPO financing. The central bank also flagged governance issues within the company. However, JM Financial Product Management claimed that there were no material deficiencies or governance lapses. In a statement, the company said the net income from the IPO financing business is 7 crore rupees in the first 9 months of FY24. This constitutes 1.5% of the total income of JM Financial Products and 0.3% of the consolidated income of the company. The company went on to say that the impact of the RBI order in monetary terms is not material. Shares of JM Financial did manage to recover some lost ground in trade today, but still ended deep in the red. Shares of IIFL Finance hit lower circuit for the second straight day. The stock has fallen 36% in the last 2 days. This after the Reserve Bank ordered it to stop sanctioning and disbursing fresh gold loans. This stock fell despite a $200 million liquidity commitment from Prem Vatsa's Fairfax Group, which owns sizable stake in the IIFL Group. Fairfax owns 15% stake in IIFL Finance. It also owns more than 27% in IIFL Securities and holds a 33% stake in 5paisa Capital, which is another IIFL Group company. The Reserve Bank of India has directed banks to allow eligible customers to choose from multiple card networks at the time of card issuance. Now, card issuers are also not allowed to enter into any agreements with card networks that restrict them from accessing services offered by other card networks. Now, issuers who issue credit cards on their own authorized network are exempt from this rule. In recent months, the Reserve Bank has imposed business restrictions on several entities, including NBFCs, fintechs, and credit card networks. My colleague Ritu Singh is here with a roundup of all the action the RBI has taken and the rationale behind it.
You know, whether it is a 1 or 2 lakh rupee penalty or restrictions on a specific segment, the complete shutting down of a business, or even the supersession of boards, we've seen a spate of actions against financial entities by RBI, and some of them more recently have even been of an unprecedented nature. And the larger message we gather from these actions is that even if it seems harsh in the immediate term, the intent is to make the system stronger and help these financial entities grow their revenues, grow their profits, but in a risk-calibrated manner, because ultimately the buck stops with RBI when it comes to maintaining financial stability, and when it sees any potential risk emerging, it takes action. It is also very clear that compliance cannot be just another checkbox exercise, and good governance must be a priority. Now, from our understanding of how RBI and these actions work, these are well thought out, deliberated actions, and to say that these restrictions are a moment of surprise for the entity involved will be incorrect, because there's plenty of internal dialogue that happens before such actions are taken. If dialogues don't work, there are penalties. If those don't work, there are warnings, and in severe cases, these embargoes are placed or businesses may be shut down. The nature of these actions that we've been seeing from RBI recently has been both targeted and broad-based as required. So on one hand, you saw what happened in the case of the gold loan business of IIFL Finance, or the digital banking business of HDFC Bank, or specific product lines of Bajaj Finance, and in other times more broad-based like what the regulator did with unsecured loans. But the message is clear: risk management, compliance and governance must be prioritized, and if there are discrepancies, entities must course correct or face action, because the regulatory attitude itself is changing, making a very clear distinction in terms of what is tolerable and what is not.
Right, thank you, Ritu, for that. On to a CNBC-TV18 exclusive. The Directorate General of GST Intelligence has alleged that a dozen FMCG companies have evaded taxes worth over 1,000 crore rupees. Sources have told CNBC-TV18 that these companies are allegedly paying a lower GST rate on extruded and fried pellet snacks. Remember, the government has clarified that GST on extruded snacks stands at 18% and companies are currently paying only 12%. Timsi Jaipuria joins us now with the details. Timsi, what does this mean for the companies now?
Well, that's right. The Directorate General of GST Intelligence is acting against FMCG players. What we pick up from sources is that FMCG players like ITC, Pratap Snacks, PepsiCo, Balaji Wafers, RP Sanjeev Goenka Group Company, Guilt Free Industries, etc. are under this action. And the action is against about 10 to 12 FMCG companies on alleged tax evasion linked to classification issues. We also pick up that DGGI has sent notices to many of these FMCG companies for paying lower GST rate on extruded snacks and fried pellet snacks. Remember, government had clarified that any snacks which has been prepared by extrusion process should attract 18% and not 12% as is being paid by the industry currently. DGGI allegations includes about 500 crore rupees of GST evasion by ITC Limited, 300 crore evasion by Pratap Snacks, about 175 crore plus evasion by PepsiCo India, 19 crore evasion by Balaji Wafers, close to 40 crore rupee evasion by RP Sanjeev Goenka Group's Guilt Free Industries Limited, 68 crore rupee evasion by Sarveshwar Foods and many others. When we reached out to several companies who are named under this action, ITC was the first one to respond, and their spokesperson said that we are unable to comment as industry-wide inquiries are on. Meanwhile, we are awaiting responses from several other companies who are covered in this particular action. Let's see what happens finally. How much of the money do these companies come out and pay, whether based on voluntary payment or post the show cause notice? That is something that we'll have to wait and watch out for.
Right, thank you, Timsi, for the update. The government has stepped up its foreign investor outreach. Government sources tell CNBC-TV18 that the centre has asked central public sector enterprises to hold roadshows for investor feedback on its calibrated divestment strategy. Sapna now joins us with more details. Sapna, what are your sources telling you about this?
Well, surely government sensitizing and telling their own CPSEs that it's important to have interactions with the investors, particularly the foreign stakeholders, and hence there is a lot of emphasis now on CPSEs along with top government officials undertaking regular roadshows, regular interactions so that the feedback can be incorporated. Also, companies getting a chance to showcase their performance so far, and what is in government's mind as far as their disinvestment strategy and the dividend policy is concerned. So all of this put together, so far we have been given to understand that the response from a very wide section of foreign investors has been very positive. Just one of the important roadshows has got concluded in terms of GIC RE. It went on from 19th Feb to 1st March. And we are also given to understand that despite the fact that the government has taken a conscious decision of not having a divestment target, so to speak, in this year's budget, but the calibrated strategy as far as disinvestment is concerned, probably that has gone down well with foreign investors. So it's a plus as of now, both for the CPSEs and for the Government of India. And most likely this trend of roadshows is going to continue. We are given to understand, or rather we are hearing that probably, something may be on the cards as far as New India Assurance is concerned, probably a roadshow over there. Also down the line, the oil and gas sector, upstream and downstream companies, probably there could be some roadshows with foreign investors. So this is going to be a trend in the coming months. And last but not the least, however, government is trying to clarify that this does not mean that these roadshows are pointing towards some plan for an FPO or an OFS in any of these companies. That may or may not happen, but that's not the stated intent. The stated intent is basically to get feedback from foreign investors and try and showcase the performance of CPSEs so far.
Right, thank you, Sapna, for that update. Time for a short break, but coming up next, the Supreme Court highlights a trust deficit between Kerala and central government. The court nudges Kerala and centre to resolve their deadlock via a meeting. More details when we return. Welcome back. Confident of winning the upcoming general elections, the Modi government is charting an action plan for the third term. Sources say cutting compliance costs and doing away with penal provisions of laws will be a major focus. Parikshit Luthra is here with more updates. Parikshit, what can we expect?
Well, the government is closely working on a roadmap to increasing the manufacturing footprint in the GDP, or the contribution of manufacturing to the GDP, and there would be a plan for this in the budget that is delivered in the month of July. We also believe that the government will continue with this high capex push, adoption of digital public infrastructure, and the push for infrastructure. All of this will find strong mention in the full budget that is delivered by the finance minister once the elections are over. We also believe that the Viksit Bharat roadmap that the government has been working on will be shown in the full budget if the Modi government, if the NDA government is elected for a third term. We can also tell our viewers that Jan Vishwas law that was brought by the Narendra Modi government in its second term, there will be a second version of it to decriminalize more laws in the country, remove penal provisions so as to assure businesses and businessmen that they will not be penalized for petty offences. At the same time, the government has just completed a study on cost of regulations across different states in the country, and this is also going to be released in the next few months in order to make it more competitive for states to reduce the cost of compliance. In fact, reducing cost of compliance will be the big focus in the coming months, especially after the election. So all eyes on the union budget after the elections, because that will have the agenda, the roadmap for Viksit Bharat, or a developed India by 2047.
Right. Thank you, Parikshit, for that update. Shifting focus to the Supreme Court now, the Kerala government has sought additional funds from the centre to meet their fiscal deficit target, while the apex court highlighted trust deficit between Kerala and the central government. While hearing the CPM government's plea against the Modi government's borrowing cap, the court suggested that both sides engage in a meeting to resolve the deadlock. Ashmit now joins us with more. Ashmit, what did the Supreme Court say today?
Well, to begin with, it's quite an interesting issue being discussed before the apex court. The reason being, this is unprecedented. Never have we had a state government move the apex court, argue against a borrowing limit, and then have fiscal disputes being settled in a court of law. This has never happened before, and that's perhaps the reason that the apex court is nudging both sides towards arriving at a settlement outside of court. That was the direction that the apex court gave, that perhaps the both parties should meet together and arrive at a consensus, the centre as well as the Kerala state government. Now, what is the issue at hand? Well, the issue essentially is the Kerala government is challenging the borrowing limit, the borrowing cap that has been placed by the centre on the state government. Kerala has been arguing that this is, they enjoy fiscal autonomy, that this is a plenary power, an exclusive plenary power, that there is no scope for intervention here by the centre, that this borrowing cap is arbitrary in nature, that states have their own fiscal management frameworks in place, and that there is no scope for intervention here by the centre. The centre, on its part, however, has been criticizing the Kerala government for reckless borrowing. That's the term used by the centre. The centre argued before the apex court that this action of the Kerala government to borrow recklessly has implications on national finances, has implications on issues such as credit ratings, and that is something that the centre is really wary of. And in fact, the centre also said that any such cap that is introduced is based on the recommendation of the Finance Commission, which in turn bases it on the FRBM Act. So the broad thrust here is the last meeting that took place between the centre as well as the state of Kerala, there was a proposal by the centre that, look, we'll allow the Kerala government to raise 13,000 crore rupees provided they withdraw their application from the apex court. Kerala has been arguing we're anyways entitled to 13,000 crore rupees. We want an additional 15,000 crore rupee borrowing limit hike. And that is the main demand that the two parties, centre as well as the Kerala government, will be dwelling on, will be negotiating on. We understand that is what the direction that the apex court has given. Of course, both the sides are free to now move the apex court to update on what the progress has been on this talk between fiscal deficit versus trust deficit.
Right, interesting arguments there. Thank you, Ashmit, for that update. Moving on, Italian luxury brand Gucci has launched its Spring Collection 24 in India. This is Gucci's new creative director, Sabato De Sarno's debut collection. My colleague Shruti Mishra caught up with its global brand ambassador, Alia Bhatt. She asked the actress about her collaboration with the brand and her vision going forward. Here's a slice of that conversation.
Considering your love for saris, will we see a Gucci-inspired sari collection soon?
Did you read my mind? Because literally, I'm like, that's my dream.
Okay.
If that happens, which I'm most definitely, I'm putting out all the energies in the universe.
Wonderful.
Yeah. Now to me, that's a milap.
All right. So that could happen. And Alia Bhatt is trying her best.
Yeah.
All right.
I just have to pick the right moment. It has to be the perfect moment where I wear a Gucci sari.
And that'll be a first.
That'll be a first. And then then they'll be only making saris in India.
We are at this Gucci store in the Jewel Plaza. And, this is not the only Reliance connection you have.
Yeah.
You sold a majority stake to Reliance Retail Ventures in Adamama. And you're now looking to enter new categories, baby furniture, stories, animated series. Any timelines you can share? When can we expect those offerings to hit the market?
I'll talk about the first one because there's a lot planned for this year.
Okay.
But since you mentioned stories and I'm a storyteller at heart, business, I don't know how it came into my life, but actually I'm a storyteller. We can expect stories this June.
All right, this June, that's pretty soon.
Yeah.
So a song that describes best your association with Gucci. And if you could sing a line.
Good question. Okay. A song that describes
your association best.
I'm like blank right now. I'm thinking something to do. Pehla nasha, pehla khumar. Naya pyar hai, naya intezar. I don't know. But I know it's like pehla pyar, pehla nasha. That's
all right.
So
thing. First love with Gucci, it's the pehla pyar, and we hope this is forever.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.